Today, weakness in the labor market as more Americans applied for jobless benefits. What's behind the slowing economy? Automaker woes. A new report says the global chip shortage could cost car makers more than initially thought. How bad could it get? And hundreds of Chinese companies could be delisted from American stock exchanges, says the U.S. government adopts a new rule to protect investors. That and much more coming up on NTD Business. Good evening. Great to have you with us. I'm Paul Graney. The number of first-time jobless claims ticked up for the second time in 2 weeks last week. Economists were hoping for a post-Labor Day employment boom. It doesn't look likely. Over 350,000 Americans signed on last week, up 16,000 from the week before. The number of people continuing to get benefits is also up, a sign of deeper problems in the labor force. The Federal Reserve says it will only consider tightening monetary policy to fight inflation if employment improves and the economic recovery stays on track. So joining us to discuss the economic outlook is Chief Strategist at RIA Advisors, Lance Roberts. Roberts helps manage over $1 billion in assets with RIA. Lance, pleasure to see you as always. Jobless claims ticked up again last week, and for just 2 weeks in a row we've seen it. The economy seems to be slowing. Well, what do you think's behind it?
Well, we've written about this quite a few times in our newsletters, as well as some of our blog posts we've written about really since the beginning of this year. We wrote an article very early this year called "The Sugar Rush Economy," that we would see very strong rates of economic growth because of all the stimulus that was coming in. $5 trillion worth of stimulus hitting the markets in 2020. That's 20% of GDP. So a lot of that was sent in checks to households, et cetera. So that really helped pull what we call pull forward consumption. In other words, I give you money and you go buy things today that you probably weren't planning on buying, but now that you have the money, you'll go ahead and do it. So future purchases pull forward, gives you a lift to economic growth. The mistake that economists made was thinking that that would be permanent and that we would just keep spending at that level. The reality is, as soon as they spent that money, now we have to live on the income we make. Inflation is going up. Wages aren't keeping up with inflation. So now consumption, which makes up 70% of the economy, is now slowing rather sharply. So that's being reflected in both expectations, which have come down sharply, and also realistic numbers. And we're seeing that really show up kind of across the board now in a lot of the economic indicators.
We are. I think we saw it again this morning in the PMI numbers. We see demand for services falling off, but at the same time, their input costs are rising. So we have a lot of people using this term stagflation recently. You think this is where we're headed, medium term, or what do you think?
Well, it's, the issue of stagflation is simply that you've got inflationary pressures on one side, deflationary pressures on the other. Most importantly, that deflation is in wages. So we have these rising inflationary pressures that we can't compensate for because we don't have any excess income. That's exactly what we're seeing now. What the Fed's been hoping for is that this inflation would be transient. A lot of this inflation that we're seeing coming in is from supply chain disruptions and other types of inputs, commodity prices as an example, that the Fed was hoping would kind of subside as the economy got back on track. That's not happening because we're unable to really facilitate a repair of these supply chains. Right now, to rent a container for 3 months cost as much as buying 68 Ferraris. It's just absolutely phenomenal. And that, of course, that cost has to get passed on to consumers. One of the things we look at very closely here is the producer price index as compared to the consumer price index. Right now, the spread between those two numbers is the greatest on record. And what that says is that producers can't pass on that cost to consumers. And that's getting bottlenecked up in producers, which is going to affect profit margins. That's going to undermine earnings expectations in the markets for financial investors. And it means higher prices and what we call shrinkflation to consumers. Shrinkflation is when you buy more, you pay more for a product, but there's less in the bag. So we're seeing a lot of grocery stores in particular do exactly that.
Lance Roberts, RIA Advisors. And data this morning showing U.S. business activity is slowing down. Data from IHS Markit says the PMI for the service and manufacturing sectors dropped to its lowest reading in 12 months. New order growth slowed to its lowest pace in over a year. Manufacturers are also struggling with shortages of raw materials and labor. That's led to mountains of work unable to be finished. In fact, this month saw the biggest jump in unfinished work on record. Trucking challenges are also adding to manufacturing lead times. Meanwhile, the services sector, which includes restaurants, grew at the slowest pace in 14 months. That's a significant downturn considering we saw record growth as recently as May. Keep in mind the service sector accounts for more than 2/3 of U.S. economic activity. Here's NTD's Evelyn Lee with restaurant owner Adrian Calvo.
Restaurants sure don't have it easy right now. Demand is peaking, but the industry is facing a different set of challenges now. Hiring is still hard, and inflation is putting a lot of cost pressure on businesses. Joining me now is Adrian Calvo. It's great to see you, Adrian.
Hi, thanks for having me.
Well, I know you have 3 restaurants around Miami, and four, wow. And I heard you opened 2 of them during the pandemic, right?
Yes.
So how is business going for you now?
Well, thankfully, I'm very fortunate that business is booming. I mean, people want to be back to normal. They want to enjoy good food, each other's company, of course, safely. But the struggles are there. They're really there.
So today's data shows that businesses in the service sector have rarely seen cost rising so fast, so high. So how does that affect you and your business?
Well, it's a delicate dance to keep things still affordable and in a price range that our guests are used to, But for us, the costs of simple goods are going up. Not just things like beef. Beef is through the roof. It has never been this high, but simple like paper goods, things like toilet paper or to-go containers. Like we're known for big, bold food. So people never finish their food at one of our restaurants. So they take it to go. And now a to-go container is about 6 times the price that it used to be pre-pandemic.
Wow. So, I mean, I have to ask, are you forced to pass these costs on to the consumer in the end?
So what we're doing is we do a service charge, but honestly, we're only charging a 50% of what that cost is. And then I'm just taking on the cost myself, because it's only so far before the guests will, how far they'll understand. It's not their fault, their problem to understand that even a paper napkin or a disposable fork or cutlery set has, 6 times the price. That's not their concern. And usually if it's just too expensive, they'll pass on to, they'll go to another establishment. So it's very hard to incur the cost, to struggle to keep the business and keep our guests happy.
I see. And there is, on top of that, labor shortage now in the U.S. So is that an issue that your business is running into as well?
Very, very much so. In general, labor is an issue, but even more so in the restaurant industry, because we were the industry that just got shut down and just got manhandled. It was like, okay, we're shut down. No, we're open. Outside only. Indoor, outside, 50%, 25%. Then, it was crazy. So a lot of people just packed up their bags and left. They left culinary arts. They left front of the house service. And finding the way back, I think, has only been for those that are truly passionate about the industry.
There was a lot of debate about the enhanced unemployment benefits. I'm wondering,
Yes.
Ever since that ended, have you seen any improvement?
Absolutely. When that ended, it was like the floodgates opened up. People need to work, and people love food, and people love serving others. And I just think I think next year, God willing, we'll be having a different conversation.
All right. I'm really glad for you that you're seeing improvement on that side. So thank you very much for being here today.
Thanks for having me.
Paul?
Thanks, Evelyn. Labor shortages hurting electronics makers too. Means you might struggle to find your favorite gadgets this holiday season. Around 80% of electronics makers can't find qualified help, so now they're having trouble delivering on time. Trade group IPC says labor and material costs are also rising. The lead times, or the delay between receiving an order and fulfilling it, is going up, sometimes as long as 2 months. Situation is worst in North America and Europe. It's not looking good for automakers around the world either. A new forecast shows the chip shortage could cost them over $200 billion this year. Almost 8 million cars won't get made, according to one industry consultant. Besides the chip shortage, high prices and low supplies for items like steel or plastic are making the problem worse. Car makers are reportedly committing to more longer contracts so they can lock in supplies, buying items up to a year in advance. And on Wall Street today, stocks rose broadly for a second day in a row. The Dow rising 507 points, about 1.5%. S&P 500 gaining 53 points, 1.2%. And the Nasdaq adding 155 points, about 1% today. And the U.S. audit watchdog has a new rule aimed at protecting American investors. It could see hundreds of Chinese companies delisted from U.S. stock exchanges. If a company is headquartered in a place where authorities don't let businesses comply with U.S. law, then the company will just be considered non-compliant. It didn't specifically mention China, but it is a fact that Chinese authorities don't allow firms to open their books to U.S. audit. They call the accounts state secrets. Around 250 Chinese companies are listed on American exchanges with a total market cap of over $2 trillion. The Chinese regime is still silent on whether it'll intervene to save real estate developer Evergrande. Many say it'll be forced to default. Yesterday, the company said it will pay interest on a domestic bond due today, but didn't give plans about a separate dollar-denominated bond. The ratings agency S&P Global has called the company the world's most indebted real estate developer. The struggle to pay back debt has prompted fears default might cause global shockwaves, but many economists say the risk of global market contagion is low. So joining us to discuss the potential fallout from the China Evergrande story is the chief economist with China Beige Book and senior fellow at the American Enterprise Institute, Derek Scissors. Derek, pleasure to see you again. Hope you've been keeping well. How do you expect the CCP to handle this Evergrande case, given that this kind of type of indebtedness isn't an isolated case in China and could pose even bigger problems in the future?
That's right, and that's why they can't bail out Evergrande and make everybody involved whole, because the lesson would be for a bunch of other property developers and perhaps firms outside the property sector that, oh, I can be irresponsible and everything will be fine. So basically someone has to suffer, and what the CCP is doing now is deciding who's going to suffer. It would be great if they did this on the basis of what was financially most efficient or economically most productive, but probably they're going to do it on the basis of politics. And whoever they value politically will be helped, and whoever they don't value politically will lose the money they invested in Evergrande over time.
What is economical is, of course, the size of China's real estate market was like over 20% of its GDP. If Evergrande was to fail, are you seeing possible contagion with these other highly leveraged property developers?
Well, they're almost certainly not cross-invested. In other words, that another property developer is invested in Evergrande, and Evergrande makes its situation directly worse. I don't see any contagion. Contagion is a financial issue. China has a non-commercial financial system. If the government says you have to lend, you have to lend. You don't get to say, I'm not sure, this is a good risk. Too bad. On the property side, China's property market has been weak this year. It's now going to get weaker. That will drag on growth. The government can announce whatever figures it wants. It can just make up figures for the fourth quarter, no problem. But true growth will be weaker because of this, and that will affect some foreign countries that ship to China to supply their property markets, mostly iron ore and bauxite for building, some copper. So there's going to be an effect that we're going to see around the world, whether China acknowledges it or not. It'll be macroeconomic weakness and import weakness, not financial contagion.
Interesting points. Do you feel that development, property development, will take on a smaller role in the Chinese economy now? And then what does that mean for even the feeling of wealth among the Chinese who've relied on it to kind of improve their quality of living, at least artificially?
Yeah, it's a tough situation that the government has gotten itself into. Property has had boom and bust cycles for 30 years, maybe even a little longer, where everything's buy property, it's the greatest thing ever, and you're going to get rich, and then oh no, it's doomed, and we're going to have to change our system. It never quite happens that way, and that's because Chinese banks are not really beloved by Chinese savers. They put their money in there, but they don't really trust the banks. The stock market has a casino element to it, even more than the property market. So it's not very easy for China to get away from property in the short term as having this crucial role in the financial system and in the economy in general. As China ages, that will help pressure on property. We'll have fewer young people wanting to get new places. But that's really a long-term effect. I think we can talk about a property bust. I think it's much harder than it sounds to make property less important to the economy.
Very good. Derek Scissors, American Enterprise Institute. Thank you.
Thank you.
And the Chinese regime won't allow their companies to open their books to American auditors, but they are asking them to share the data with the regime itself. China's central bank will soon have access to the private credit information of hundreds of millions of users of Ant Group's online credit service. Ant Group's service says its consumer credit data will be added to the database of China's central bank. Consumers that don't authorize the sharing of their data will simply not be able to use the service. The move is part of stricter regulations for Ant Group. It operates many digital payment, investment, and insurance services and has over 1 billion users worldwide. In China, about 500 million people use its online credit services and loan services. And Apple isn't happy. The European Union has plans to make all tech firms put the same charging ports in their phones and tablets and other gadgets. And that hits the Silicon Valley company more than any other brand. Apple uses the different cable from the USB-C connector that Brussels wants to make standard. Most new Android phones already use the USB-C connector, and Apple says the regulation will stifle innovation, even hurt consumers. The EU's industry commissioner, though, sees it the other way around. He says it means people no longer need a bunch of different cables and can power up all their devices with the same charger. The proposal will need green light from EU member states and lawmakers. And surging natural gas prices across Europe could hinder the economic recovery in Spain. Small businesses there are crucial to local employment, but they're also more exposed than elsewhere in the continent to steep rises in power bills. NTD's Faye Corder has the details.
Energy bills have more than doubled in European countries as gas prices rocket. It's due to low storage stocks and other factors. Analysts say the energy bill spike is hitting Spain particularly hard because many are on flexible rates, and small businesses are feeling the pain. Mayra Maldonado runs a dry cleaners in Madrid.
This has affected us a lot because our machines have to be working at all times. We can't depend on a timetable, and this affects us because our machines use up a lot of energy and we can't find another way to do things.
Small businesses account for over 61% of Spanish economic activity and about 72% of total employment. Spain's economy is coming back, but that recovery has been heavily dependent on spending by consumers, who are now facing 35% annual increases in their power bills. The Bank of Spain, in line with the European Central Bank, insists the rise is temporary and will not affect the economy. Last week, the government introduced an emergency package, reducing taxes and putting a cap on gas prices. Italy and Greece face similar problems and are also eyeing measures. Faye Corder, NTD News.
And still to come this evening, we take a look at back-to-school spending. It's predicted to reach an all-time high. How much more did families spend on average this year? One of the original copies of the U.S. Constitution is going up for auction. Made in 1787, only 11 copies survive. That and more after this short break. Welcome back. Back-to-school spending may have hit a record high this year, according to one survey. Here's the NTD's Andrew Thomas with a look at the numbers.
Alicia Zucker was mostly optimistic as she took her 7-year-old twins to school after more than a year of the pandemic.
It's very exciting that everybody's back in school, but I was worried I was going to miss my kids a little bit, and it's fine. We're good. We're all doing well.
Zucker mostly shopped online to prepare for the new school year.
Yeah, we just bought a bunch of supplies. I did a pretty good job of shopping, finding the cheapest prices for the school supplies, so it wasn't too big of an ask.
Families with children in elementary through high school plan to spend about $850 on average on back-to-school items. Almost $60 more than last year, according to the National Retail Federation. Total back-to-school spending could reach $37 billion, up about $3 billion from last year. That would be an all-time high in the survey's history, the NRF said.
Well, influencers are not going away anytime soon. It's just different this season. And that's because these students, whether they be high school or college students, they want the more authentic influencers who really walk the walk and talk the talk.
The Federation also saw back-to-college spending at $71 billion, also up about $3 billion from 2020. A lot of that money went for denim, shoes, and makeup. Overall, strong late summer back-to-school sales could provide U.S. retailers much-needed revenue. Andrew Thomas, NTD News.
And an extremely rare printed copy of the Constitution is going up for auction. Sotheby's estimates it's worth $15 to $20 million. Here's NTD's Colin Fredrickson with more.
This official first printing of the Constitution is thought to have been made on the evening of September 16, 1787, and it was only for the delegates to the Constitutional Convention to use. About 500 copies are believed to have originally come from this first printing, but only 11 survived. This is the only copy that isn't in a permanent institutional collection.
The others that survive are mostly in libraries or still in official government repositories. For instance, the Delaware Hall of Records has one. There are 2 copies at the Library of Congress. The American Philosophical Society has one.
The document going up for sale doesn't have any signatures, but it includes a list of the delegates to the Constitutional Convention. It also has a letter of submission from George Washington to the Continental Congress.
Presumably, this belonged to one of the delegates to the Continental Convention or to a member of the Continental Congress. That's who this very small edition was printed for. It seems to never have left the Philadelphia area, and it was consigned to us in 1988.
Sotheby's estimates that this copy is worth $15 to $20 million, but they've sold items of that value before. For example, they auctioned the first book printed in British North America, the Bay Psalm book, for $14.3 million in 2013.
What we've used as our guide is the Declaration of Independence, the first printing of which I think is the only document that can be compared to this Constitution in terms of significance and influence. First printings of the Declaration of Independence are actually much more common than the Constitution. There are 28 known copies.
The bidding process will take place at a New York evening sales event in November, but the date is yet to be announced. This will be the first time a manuscript or historical document will be presented for auction along with major pieces of fine art.
That's the latest business updates for today, but you can still catch NTD Evening News with Stephanie Cox. That's at 6:30 p.m. Eastern. For NTD Business, that's all for today. Thank you for watching. We'll see you tomorrow.